Hi, this is Ivan Alon, the founder and chief investment officer at Awame. Right now I'm making this podcast to you from Hong Kong, where my family and I spent the holidays here. It was our first holiday as residents in Hong Kong, and it was a busy 2025. It was quite an exciting process begun over a year and a half ago of expanding our asset management operations from Los Angeles, where we're regulated under the SEC, to Hong Kong, where we're now regulated under their SFC, the Securities and Futures Commission here in Hong Kong, as a Type 9 asset manager. And all of this has been done in the effort to have better insights so that we can make better decisions regarding our global macroeconomic research, which impacts our client portfolios, our investing clients' money. And, in this process, it's been so interesting because people have asked me quite a bit, and I wrote a Forbes article about this as well, as to why being physically located in Asia, and particularly right next to the second largest, or I should say part of Hong Kong is part of China, but being in the second largest economy in the world in nominal terms, the number one largest economy in the world on a PPP or purchasing power parity basis, which is China. And, as someone who's been doing this professionally since 1996, so 2026 represents my 30th year professionally in this business of investment management, having started in 1996 after graduating from Boston College and moving to Chicago and starting at Nuveen Investments at 333 West Wacker Drive in downtown Chicago in the Loop. And so it's been quite a journey from starting in municipal bonds and now being a CIO and managing a global macro strategy for, at this point, primarily U.S. investors, U.S.-based investors, and now here in Hong Kong in order to diversify the inputs to the research. Research is only as good as the insights you're able to glean from it. Data is ubiquitous. You can have tremendous amounts of information, quantitative and even qualitative data inundating you. But really the most important thing, and I've said this so many times over the years, the most important thing is, what are the questions you really ask of the data? And if you're not asking very good questions of the data, it doesn't matter how much data you have. And so a lot of our research, which is really a Mosaic-based process of research, a lot of the research is about asking good questions, having a qualitative assessment of scenarios and situations, and in order essentially to formulate the best forward-looking risk assessment. After all, this is what the capital markets is all about. It's all about trying to figure out what's going to happen next, because you're only as good as your next quarter of performance. And what you did last quarter, what you did last year, what you did 5 years ago, what you did 10 years ago is completely irrelevant. Of course, it's nice to have a track record. In our firm, we have a very nice, in 2026, officially a 10-year performance track record, and it's been independently audited over that period of time since inception. And we're very proud of our alpha-generating performance history. And yet none of that really feels satisfying to me at all. You cannot rest on your laurels one bit. You have to constantly be, I would say, obsessed. It's beyond focused, but truly obsessed with where's the opportunity next. And in asking the question of where the opportunity is, you're automatically assessing areas of risk, because if you're over allocated to particular parts of the capital markets and in our world, and in my world in particular, we're focused exclusively on public markets globally. It's absolutely vital to keep your obsession active. And what I mean by that is reading is great. And I read, several hours a day from a variety of sources all over the world, different publications. But there's nothing like getting out of your chair, getting out of the office, going to for example, local CFA Society meeting, which, I'm a longtime member of the CFA Institute. They have a great network of societies around the world. I was an active member in the New York Society for a while, the Los Angeles Society, and now here in Hong Kong, active member here. There's nothing like meeting with colleagues and asking them, so what are you doing? What do you think? What do you think about your business? What are you worried about? What are you concerned about? What are you really happy about? And having them share their thoughts, comments, observations. And to me, this is one of the most valuable components of our Mosaic research. And you can't really get that by reading the newspaper. You can't really get that by looking at data online. And like I said earlier, we've got massive amounts of data. Everybody has data. You have Bloomberg, and you got Y charts, and you've got trading economics, and you've got CNBC, all these different data providers, and now you have AI analytics, which are overlaying on everything for quantitative and also qualitative assessments on sentiment. And so all of this is extremely valuable stuff. But again, it's what are the questions that you're asking of all of this data, and also who are you asking the questions to? And if you're interfacing with, a database, the questions you ask of that database are incredibly important. If you're interacting with people that are professionals in different types of industries, different entrepreneurs across various industries, you're going to get back really a tremendous amount of feedback that you can then consider in your Mosaic research. Because ultimately, clients place capital with us because they don't have the time to do this work. And they do believe ultimately that spending the time to do this work is worth it. And we, of course, agree with that. There is a way to glean an understanding, or at least formulate an opinion about what's going to happen next. And this is how we make a living. We make a living based on the quality and the value of that judgment that impacts the value of the portfolios, which impacts the value of our compensation. So we have a high degree of interest in these outcomes. We're fiduciary-based asset managers, so we're not charging commissions based on someone giving us capital, and then we take a cut of that capital and then give it to some other money manager. No, we're not doing that. We're taking these funds, we're making decisions around it, and we earn fees based on the value of these portfolios. So it's incredibly critical that we not only formulate an opinion, but also have a ongoing framework of questioning that opinion and whether or not we continue to maintain a certain consideration or opinion or exposure or allocation within a client's portfolio. And you can't do this in a silo. You have to have active people around you that are also looking at the data, that are also interacting with one another. So the team that we have now is a global team. We have team members here in Hong Kong that are sitting with me. We have team members in Los Angeles sitting with our managing director, Jacob Weston, in Los Angeles. And we all get together every week in our investment committee meetings formally, 16 time zones apart, and have these in-depth discussions based on all of the research that we've been collecting over that prior week. And we read summary reports, and we have preview reports, and so we take this process very, very seriously, and have only been evolving it more and more and more as the years have gone by, over the past decade of doing this very formally, managing money in this very formal way. And so much so that your level of confidence of understanding the discipline that you do exercise is vital, because in having a discipline, having a true discipline that you have aged, means that you now have a worldview and a framework that you can rely on, and a confidence level that you can achieve in making decisions. And the nature of a discipline isn't that you only can see things through one prism or one facet of the prism. It's that the discipline itself and the framework itself allows for mutability, for variance of that perspective over time. And that's really the hallmark of an incredibly powerful framework. And so it's very exciting to be here at the beginning of 2026, having a momentous and notable 2025 of doing something that personally I've dreamed about since 1988. It's been a long time, dreaming of having a business, not only a successful business in the U.S., but a business that then can go international, and not only take what it has done to go overseas, but also to then interact and collaborate with partners also overseas for further enriching the work that we're already doing for our clients, and certainly the loyalty that I personally have with our client base, investing client base in the U.S. is very, very high. And I've come to view them, many of them, as friends. And so I look forward to getting back to the U.S. in 2026 and spending time with them and having lunches and dinners and interacting on a one-on-one basis. But every single day, no matter where I am always thinking about them and the clients that do place their capital with us, and understanding the full weight of that responsibility. And so I suppose I'll end with a challenge to financial advisors that may be listening to this. And obviously a lot of people listen to this from my best-selling book for dummies, which is Success as a Financial Advisor. And there's a chapter devoted to asset management in that book. But really the challenge is, if you're a financial advisor that is just plugging in your clients' money into some turnkey asset management platform, a TAMP, that's perfectly okay. Just make sure that you are a true student of exactly what that TAMP is doing, how they're making those decisions, both qualitatively and quantitatively, so that you can fairly represent to your clients exactly what's going on. And if at any point you feel like this just isn't adequate enough, because that was my situation. That's exactly how I felt when I started in this business 20 years ago. I was like, well, wait a minute here. These are not adequate solutions for me. And 20 years ago, I think there were much fewer TAMP solutions that were adequate, which is what was the catalyst for me to go down the path of doing this myself and building a business that was devoted to doing this in what I thought was a more proper way of risk management and also alpha generation. And luckily, the time has proved that was a good choice. But I'm not suggesting everybody should be doing that. But that if you are using these TAMPs as an FA, you should truly be a real master of exactly what that TAMP is doing. Question those CIOs, question the PMs, schedule meetings with them, have them explain things to you, and don't take anything just for granted just because somebody says something. Really put them through their paces and have them explain it to you. so that it makes sense to you, so that you can also maintain and even hopefully grow more confident in the offer that you have. Never take it for granted that just because the big company you may be affiliated with has chosen this TAMP as the preferred platform, that is enough. I don't believe that's the correct way to go about it at all. I believe the correct way is for you to own that confidence personally and individually, because the people that you work with, the people that are placing money with you, they truly are trusting you to have done that due diligence. And unfortunately, in quite a bit of my work and working with FAs around the country and now the world, I just don't find that there's a high enough percentage of FAs truly living at that level of intensity in maintaining that confidence. And I would like there to be a bit more of that in the marketplace, because I think that's just great for clients ultimately, and also it's just great for financial advisors just to be constantly challenging the status quo. I didn't know I would be speaking about that. I mean, that's the point of these podcasts. I don't necessarily know what I'm going to talk about when I press record. I just allow for the subject to reveal itself as I go through it. I always have a bunch of charts and graphs and data in front of me that I can reference if need be. But I think this was a bit more personal today, and hopefully somebody found it somewhat inspirational. And have a very happy new year and a very prosperous 2026. Until next time.